Hello everyone. Let's do another question of other receivables and payables. Whenever I read the question, the first thing that I always mark is I would always see whether I have to make an income account or I have to make an expense account. If I am telling this is commission received account, that means I am preparing an income account. If I have to prepare an income account, I will first try to recall what is the format of income account. Format of income account is OPOP IB. And let's see what's ahead. I have to prepare an income account. I have to prepare an expense account. So we will see income account. OPOP IB. Outstanding on the first day. Prepaid on the first day. Outstanding on the last day, prepaid on the last day, income for the year, money received during the year. We will read the question and try to analyze our first day and last day. Financial year is ending on 31st of January. If my financial year ends on 31st of Jan, that means my financial year would begin on Feb 1. Okay, Feb 1 to 31st of Jan. If you're not comfortable, you can always count the number of months to see whether your 12-month period is getting completed or not. Now, Mochudi Traders is paying Simon a commission on goods purchase from them. The commission is paid 6 monthly in arrears. On 1st of February 2011, that means my beginning of the year is February 2011. So end of the year would be 31st of Jan 2012. There was commission that was owed, which is $280. Owed. Owed means outstanding. Where will I record the outstanding? I would record the outstanding on the first date, on the debit side. So my first date is 2011, Feb 1. Balance begin down would be 280. It is commission owed, outstanding. I will record it on the first day, outstanding on the debit side. He received checks for commission. Money received, bank. What dates have I received? Just I will write the dates and start recording it. Feb 5, August 3. Received commission, bank and bank. 280 and 312. See ahead. On the last date, 31st January 2012 is the last date. On the last date, commission was owed 296. Owed commission on the last date 2012. Jan 31. Commission owed, balance closed down is 296. What I need to find out is I need to find out the income for the year on the last date, that is 2012. Jan 31. I need to find out the income for the year. So it would be income statement. I will close the account. I can see I want my balancing figure on the debit side. So I will do the total of my credit side, which is 888. From this 888, I am going to subtract 280, which will give me a figure of 608. We should not forget to bring this balance down on the first date of the next year, my financial year. So it is 2012, Feb 1. Balance begin down and it would be 296. As easy as that. Let's see. Which account am I supposed to make? Property tax account. If I am supposed to make property tax account, that means I will follow the format of POPO B. Prepaid on the first date, outstanding on the first date, prepaid on the last date, outstanding on the last date, money paid during the year, expenditure for the year. I have already calculated or seen what is my first date and last date. I will take that into consideration and I will paste it over here. This is my first date 2011, Feb 1. Last date is 31st of January 2012. So Simon owes premises and he pays property tax to the authorities. On the 1st of February, 2 months property tax was prepaid on the first date. Prepaid on the first date would come on the debit side. So prepaid on the first date, 2011, Feb 1 is my first date. Prepaid balance begin down 520. Then I have paid. Money paid. Money paid comes on the debit side. I will just write the dates. April 24. This I have paid 1620 for 6 months up till 30th September 2011. Bank. And on October 4, 2011, again I have paid a check for 1620 up till 31st March 2012. Here you have to remember, you have paid up to. I have paid up to 31st March. My year ends, my financial year ends on 31st of Jan 2012. That means for Feb and March, I have paid extra. For 2 months, I have prepaid again. So there is a closing prepaid on the last date. That is 2012, Jan 31. Closing prepaid. Balance closed down. 1620 is for 6 months. So what would be the prepaid for 2 months? Prepaid is for Feb and March. So for 2 months, it would be 540. Now, this I have derived. What I have to do next, I want to find my expenditure for the year. That would also be on the last date. So last date is Jan 31. So expenditure for the year, I will write income statement. This is what I am finding. So I will put it as balancing figure. I will do my total of the debit side. What is the total of the debit? 3760. From that, I will remove the 540. So my amount is 3220. What you do not have to forget is you do not have to forget to bring down the balance on the first date of the next financial year. So this will be balance begin down 540. Let's go to the next part. What is the next part saying? They are saying, name the accounting principle. What is the accounting principle that you have applied in the preparation of commission received account and property tax account? Whenever I prepare any income account or expenditure account, whenever I prepare any income account or expenditure account, I try to match income for the year with expense for the year. So the principle that we apply while preparing income account or expense account is called the accrual, or I would say it is called the matching principle. Let's go ahead. Name the section of the balance sheet on 31st of January 2012 in which commission receivable account would appear. For that purpose, I would have to see what is my commission receivable account. If you see, my commission receivable account follows the format of OPOP IB. What format does it follow? OPOP IB. So this is the closing balance, 296. 296 is outstanding income. 296 is outstanding income. Can you tell me in which section of the balance sheet would you have this 296 appearing? So since it is outstanding income, it would appear in the current assets. Since it is outstanding income, it would appear in the current assets. And over here, property tax, you see over here, this follows the format of OOB. So this is prepaid expenses. What is this? Prepaid expense. Prepaid expense would again appear in the current assets. So in which section would the commission receivable account appear in your balance sheet? It would appear in current assets over here. It would appear in current assets over here as well. Okay, read and pass the journal entry. Okay, the next part of it is on 31st of January, Simon has allowed a discount and his discount allowed account had a debit balance of 324. I need to pass journal entry to transfer the discount allowed account to the income statement. Now always remember discount allowed, okay? Discount allowed is an expense and my expense would always have a debit balance. Discount allowed is an expense always have a debit balance. If I want to transfer discount allowed to income statement, so the debit would become credit for the transfer. An income statement is debited with all expenses and losses. So I'm transferring discount allowed to the income statement. So the journal entry would be income statement debit, because in the income statement all the expenses and losses are debited. Income statement debit, discount allowed credit. Discount allowed credit. And they say that a narrative is required. So what did we actually do? We transferred the discount allowed to the income statement. So when I write the narrative, I will write discount allowed transferred to income statement. What will I write? Discount allowed is transferred to the income statement, and I close this. Let's see the next part of the question. Simon is maintaining a provision for doubtful debts account. On 1st February, there was a credit balance of 460 for the provision for doubtful debts account. Always remember, when I am doing the provision for doubtful debt account, provision for doubtful debts, I will continue this sum in the next video. Thank you for watching.